So when do you need to start investing your cash or your money into the stock market for long-term investments or for retirement? Well, the answer is you got to get started right now. If someone told you that you could save all of your money and put it into a bank account and freeze your bank account and miraculously wake up many years later and you would become a multi-millionaire and then one day go ahead and pull that money out and buy a house and pay off all your debts, you surely would be mistaken, because that simply is not the truth. The truth is that that is not even possible, because inflation goes up faster than you can actually save your hard-earned cash. And the dollar loses value over time. And if you don't believe me, let me give you an example, and I'm going to prove it to you this way. Let's say you have $100 and you put it into a savings account that had a 1% annual interest rate of return. After 1 year, you would have $101. Well, pretty amazing, right? Well, not really, because the current rate of inflation at the time of making this video is 3.2%. So you would need $103.20 to have the same buying power that you started with. So here's the deal. You may have gained $1, but because of inflation, you lost $3.20. Now, I know, we all been taught that we got to work hard, we got to save our money, we got to hoard our money, we got to stash it away, and we got to put it in a bank account. But I want to tell you, if you want to get ahead financially, you need to break out of that old system, and you need to listen closely to the secrets that I'm going to share in this video. So number one, if you want to beat the system, most investors will agree that you should have about 6 months of living expenses in your bank account that you would only use for a kind of a real emergency. If you're laid off of work or you're in an accident or whatever, the rest of your money should be invested into a diversified portfolio. Unless, of course, I tell people if you're saving for a down payment of a house, which is usually about 20% of the selling price, because here's the deal. You don't want to be at the mercy of others, and you want to be able to buy a house, and having nothing to call your own and rent all your life is actually flushing money down the toilet. So here's the deal. Home prices traditionally go up about 5% a year, and it could be more in some other cities depending where you live. So here's an example. If you own a $200,000 property, it should increase about $10,000 on average year after year. And I'm telling you, this is an awesome way to build wealth in yourself. And you can do this without even doing anything. It's just by owning a property. But here's the deal. Can you imagine trying to save that money year after year? For me, it makes me tired just thinking about it. So I definitely want you to avoid the trap of going out and financing flashy new cars and speedboats and Harley Davidsons and motorcycles and a Lamborghini or whatever it is, and take your money and put that money into your main property. Now, number two, over the COVID lockdown, the government spent trillions of dollars and printed money, flooding the economy with cash. And they did this trying to boost the economy. But when the increase of money circulation in an economy is higher than the increase of goods produced, prices go crazy, they soar, and the dollar actually loses value. And that is why we were paying a high price at the gas pumps or the grocery store or wherever, because your dollar doesn't buy as many goods and services as it used to. I mean, I remember back in my teens when I was driving around and I was purchasing gas for my vehicle, it was 98 cents a gallon, and a loaf of bread was like $1.54. Prices have gone up because the dollar loses value because of inflation. And that is why you need to start investing in stocks or the stock market as soon as you can. So the question you might ask is, why can't we stop inflation? Well, if our money was backed in gold like it was way back in the day, that would be a different story and a different topic for another time. So part 3 is spending your money is not the answer. But think of it this way. We live in a society that teaches you that you can buy whatever you want when you want it. Psychologically, we've been lied to by our society, so businesses and institutions can make money on you so you can spend money and they can profit on your expenditures. The truth is, if you live like that, you're always going to be poor and you're always going to be broke. So when you see money as a tool to invest and grow your wealth instead of buying what you want, then what I tell people is you go from being a consumer to a producer. You don't just build other people's wealth. You start putting money into yourself and building your own wealth. And this is when you stop relying on other people for support and you shift to supporting yourself. This is the idea of how to make money work for you, not you working for your money all the time. So part 4 is I want you to start right away. Many people see savings or a savings account as a nest egg and a safety net. They like to look at their account balances going up, and it makes them feel kind of safe and secure. But what they fail to realize is that the opportunity costs and the opportunity lost when they stay on the sidelines and watch other people make money, and then they wonder, why isn't it my turn? Or when's it going to be my turn? Because they're afraid to take a risk. But I want to tell you that the biggest risk is not taking a risk at all. Because if you don't take a risk at all, you end up missing out on crazy stock market profits. Because here's the deal. The stock market typically earns a 10% annual percentage yield year after year. So if you invested $1,000, basically in about 10 years, you would have a total of about $2,600. Now, I just used $1,000 for an example, but you could do $10,000. So effectively, if you invest in the stock market, you are doubling your money anywhere between 7 and 10 years. But here's the deal. If investing in the stock market is something that's scary to you, I would really advise you to try investing your cash into something that's safe, maybe in high yield savings accounts, which at the time of this video is paying about 4 to 5% as compared to about 0.5% for a normal savings account. And one thing you got to remember is this money is FDIC insured and it's easily accessible. You can get it out anytime. However, investing in the stock market should be a part of everyone's portfolio and a long-term goal that you should have. Because here's the deal. The markets, again, give an average yearly return of 8 to 10% year after year after year. Now, here's the thing that you can do. If you want to get started, you can go ahead and just call your local stockbroker in your area and ask them to put a portfolio together that's going to work best for you. So you can go ahead and start investing small amounts or large amounts. It doesn't really matter. But the key is to get started right away so you can cash in on those year-to-year returns. Money is a tool. Money is not to be hoarded. That's remember to use it wisely, and remember that you miss 100% of the shots that you do not take. So hey, if you enjoyed this video, make sure you subscribe to my channel. Let me know what you're doing in investing in the description below or the comments below, and I will see you in the next video.